No, I don't. I'm not sure.
All right, no problem. In that case, I'll check up with the academic manager to see how many people actually registered as part-time. So if we can manage to get their contact details and see what's currently happening on their side.
Okay. Were no students in the 8 o'clock to the 6 o'clock to 8 o'clock?
No, there were no students because my plan was to actually see if there was someone who's gonna pitch up now, and then if no one, then I was going to just make a recording and then just upload it.
Oh, I see. Did you not get my email saying that I'd be late?
Not really.
I sent an email saying that I was going to have load shedding and that I'd only be here at 8 o'clock.
Let me just quickly see what's up, because I think also because yeah, there was also load shedding, so network might have been.
Oh, I see.
Yeah. Oh yeah, I see it now. Yeah, I think it might have gotten late by because of network. Should we start?
Yes.
Are you prepared? All right. We're just gonna be continuing, but before that, I just want to brief you in terms of your formative assessment that is going to be written somewhere, I think in March.
Okay.
I'm not sure yet of the specific date, but once we get that, I'll update you.
Sure.
Okay, it's lesson 3, just continuation from Introduction to Business Management on the textbook.
Which it should be page 32 or 30.
Yes, I think we are restarting on page 27 based on, I think 26. I'll just restart on page 26 and then just move forward so that we
Okay,
can
just
all,
recap that. Okay, sure.
yeah. So do you always have this, do you always log in and download the PowerPoint presentation before class, or you just gonna see whatever is gonna be happening now in class when you get there?
I have the PowerPoint presentation with me now.
All right. I'm not sure if it's gonna be exactly similar to this one, but
That's
I
fine.
altered because, yeah,
Because I'll
because I
follow.
always
What I do is that I look at it, follow your lecture, and then compare the two.
no problem. Because I did talk to the academic manager, because the one that were created were a bit having less information to what I actually needed. So I just ended up editing everything.
Oh, okay, sure.
Yes, let's start. Okay, the formative assessment. It's going normally this year. I think it's going to be a sit-in one.
Like on campus.
Yes, I think it's gonna be on campus. I'm not sure in terms of part-time how they are going to arrange that.
Okay.
But they will send out a communication in terms of how it's going to be. And Nathan, which is the academic manager, will make sure that he sends out communication early in time.
Sure.
And then in terms of what is going to be covered in terms of the formative assessment is that you are going to be required to demonstrate your understanding in the following concept: interpreting and analyzing financial statement, and applying practical accounting knowledge and understanding and skills. You'll also demonstrate the overall understanding of financial and mathematic terms, and as well as basic mathematics calculation, which will all be based on the number system that we covered last week, as well as using those basic mathematics skills to actually get to apply them in the finance, using finance calculation, which involved flowing of money. So most of them here, they say that they will be in various real life media context. And the in-class closed book test total 200 marks. Here they say that it's a 2-hour long and it is based on chapter 1 and 2, which currently I'm not sure when they say chapter 2.
As far as we know, we're still in chapter 1. I don't think we've reached 2 yet. We still have to do trial balances and double entries and all of that before chapter 2.
Yes, what actually happened is that I'm just noticing something. There is an error here. It's supposed to just only be chapter 1.
Oh,
Yes,
sure?
it's supposed to be chapter 1 up until financial statement at the year end on page. Let me just fully confirm that on what we're gonna.
I mean, no, it's not 50.
It's just only chapter 1. So basically, the assessment will just be based on chapter 1 so far, based on my knowledge.
Okay, so let me just write that down, because I think also what I noticed is on the F1 brief that's online already, it says chapters 1 and 2.
Yeah, but so far, based on the context on the book, I think it's just chapter 1. Because I don't think by that time we'll have covered chapter 2.
Okay.
Yeah, so let's just wait and see. And if we manage to cover that, then that means it will also be form part of chapter 2 as well, form part of the scope.
Okay.
And in terms of the 2-hour allocation, I think they were going to increase it somewhere to 2 hour 30, because based on the principle of allocating like 100 marks for 2 hours, 2 hours is not enough.
Yeah, okay.
Because I feel if we're going to allocate 100 marks, it's supposed to be 3 minutes, 2 minutes 30 seconds per mark, which will equate somewhere to 2 hours 30 minutes to 3 hours. So that will still be reviewed as well.
Okay, I see. Thank you for letting me know.
Yes, and here it also gives a note that the best way to prepare is to attend class, which I believe on your side is not an issue. Also a matter of practice and application, where you get to make sure that you understand the context and the concept. It's one of the most important things I feel in finance.
Yeah, definitely.
Okay,
practice makes perfect.
Yeah, but in our accounting side, we said perfect practice makes perfect.
Oh.
Yes. Practice makes perfect a bit, but then perfect practice makes perfect 100%.
Okay.
Yeah. So in terms of the learning outcome that will be assessed in terms of the formative assessment, they are listed below, which is demonstrate and apply the basic principle underlying business mathematics and accounting, apply the order of operation conversion to basic mathematics problem in business, finding missing figure for simple mathematics problem that involve outflow or inflow of money, perform calculation involve function by using the 4 basic operation, which on our BODMAS rule, I believe that will be the multiplication, division, subtraction, and adding.
Okay.
And then performing calculation with decimal using the 4 basic operation, demonstrate the use of percentage in a business environment, analyze the financial statement, as well as to prepare an income statement. So these are the learning outcome for this formative assessment, and the way it's going to be breakdown in terms of section. When I have section A, where you're going to have your basic mathematics and accounting application, key concept, problem, and calculation question, which is going to give a total of 50 marks.
Okay.
Section B, financial statement analysis, a total of 20 marks. Section C, practical accounting, analysis of trial balance and drafting of income statement, a total of 30 marks. So in total, that's 100.
Okay.
So here we've got the evidence required that the student should arrive 20 minutes. I think it's a 20 minutes early before the venue, at the venue, and then the latest you can also arrive, I think it's 20 minutes after the start time.
Okay.
Yeah. And here it also mentioned that the duration is 2 hours. You will not be allowed extra time. That I said is still gonna be on review. But for now, let's just stick with the 2 hours.
Okay.
And once the test starts, you're not allowed to leave the venue before 1 hour 15 minutes. So if you sit in and they say start test, meaning that you can only leave the venue after 1 hour 15 minutes, but you will be allowed to go to the restroom if you wish to go there.
Oh, sure. Okay.
Yeah, and okay, once you submit everything and you actually forget to actually do something, you no longer be allowed to receive your script to edit or do anything the moment you step outside the door.
Sure. That makes sense.
And calculator might be used. You'll be required to always have a calculator, either it's a scientific calculator or a financial calculator. You will be allowed, and you have to bring your own, including all equipment that you will require during the assessment. No cell phone allowed. All questions must be answered. There won't be separate question to say that choose between the following two types of question.
Okay.
There will only be certain question where all question will be answered, and all question will be answered on the question paper, meaning that there won't be a separate answer book and separate question paper. So it's gonna be one thing.
Oh, okay.
And there will be instruction that will be given. I believe they will give you the instruction that will have to be followed. And student might either use a blue or a black pen while writing the assessment. Tipex and pencil may not be used, and if you use a pencil for drafting or calculating, therefore at the end you also have to erase and use a pen, and you'll also be given an extra paper for doing your rough calculations.
Okay. Can the calculations be done in pencil?
No, the final answer that is supposed to be on answer book have to be using a pen, which is an ink, which is a black or blue pen.
Okay.
No pencil. So the paper that will be given to draft is the one that you're gonna draft with a pencil, try to see the answer, and then transfer that to your paper in case if let's say you're trying to solve and see if this will be the right answer instead of damaging your own sheet.
Sure. Makes sense. Okay.
Yes. And then the most important part, please write neatly. No marks will be given for eligible selection or answer where you either write to say this or this. There have to be only one answer.
Okay.
Yep. So any other requirement or instruction will also be given during the assessment. So the most important thing is that arriving early, and if you are late, make sure that you're not more late by more than 20 minutes. And then bring your blue and black pen as well as your pencil for calculation as well as your calculator. Make sure that if you bring the cell phone, you leave it in the car or in your bag. Make sure that it's on silent for that particular moment. And then the leaving time for the exam once they start, it's 1 hour 15 minutes. And if you submit your paper and you leave, exit the door, it's done. So those are the most important rules, I think, or requirements for the formative assessment.
Okay.
Okay, this is the lesson outcome for Unit 3. We are going to be covering, continuing where we left off with the accounting equation. So we're going to continue forward with the accounting equation. And then we're going to also talk about the double entry, ledger, trial balance, as well as how these affect how this kind of account are classified within the general ledger, and how do we actually get to record financial transaction, and then how are financial transaction actually exported to financial statement. And then we're going to talk about the year-end accounting entries and procedures where once you've already drafted your trial balance, income statement, and then there is certain information that is coming after later on, how do you actually get to adjust your financial statements?
Okay.
So previously, this is based on our previous lesson. I believe you are familiar with this. How would you write the following numbers? So this is just an activity that we are supposed to do now, but based on you, I would just like to know from your side, if we actually want us to actually perform this activity, just look at them and then just give me a heads up if you want us to perform them.
Can we just do it just in case?
Yeah, we can. So you can use the chat section just to write down the following numbers. Just write 3 billion on the chat section in numbers.
Will do.
Okay, my other device is off, so I'll just quickly come this side just to see what you gonna wrote in terms of the.
So I just forgot to write down the questions quickly. Can I just write down the questions so you can look at the screen from? Okay.
Yeah, no problem. Okay, my other device is also on, meaning that I won't be switching that side. I'll just use the other side for chat.
Sorry, there's supposed to be a comma in between the 10,000 and the 3 billion.
Okay, I see that. That's correct.
Okay, find the values of the numbers that are in red and bold. Okay, so when it says find the values, do I have to just write solely the value, as in the words?
You can write the value in words or just write it. Normally, let's start with just writing it in words, or just so that because we already write them in numbers, so this time let's just write them in words.
Okay. So this is where I have a little bit of confusion. Would you write it as 8/10 or 80?
No, you can write it as 80. So finding the value is just to determine the value. So 810 is just to say that okay, the value is 8 in the 10th. But if we're finding the value of the number 8, that means it's 80. So what I actually want is just to make sure that you're able to actually pick numbers out without struggling to say that, okay, the value that is 7 falls within the thousand or the millions.
Okay.
So this is actually like to identify if you'll be able to round off like amounts to the nearest.
Oh, okay.
Yes.
Okay. I posted my answers. I don't know if it's correct.
Yeah, that's 100% correct. I believe you can actually now be able to write a full check without making an error. Okay,
great. Sorry, because last year I think I got a little bit confused with the words part of the number writing. I think that's also where I had a little bit of confusion.
Yeah, so I just want to like twist the example of find the values now.
Okay.
Yeah, so that I can get to see your rounding off skills since we already covered that. So the last number, the last one.
Yes.
1483782. What do we read that number as?
What would we read it as?
Yes.
Must I say it out loud or write it down?
No, you can say it out loud.
Okay. 1,400,083. No. 1,483,782.
Yep, that's the right way.
Okay.
So it is the trick part there where people get to, you can be able to write it down and you can be able to express it in words, but another challenge is actually reading the number out loud.
I see.
Yeah, so once you understand the face value, the place value, to say that, okay, this number is within the 8,000, this number is within the thousands, this number is within the 100,000. So it's just a matter of being able to combine that and read that out so that this is 1,483,782.
Yeah.
So the question comes whether this is tomatoes or rands, then you can put the rands if it's rands. If it's tomatoes, you can just say tomatoes.
Ah, okay. I see what you mean.
Yeah. So now I want you to round off this number to the nearest thousand.
To the nearest thousand.
Yes. This is where the tricks comes in.
And the last number, the 1,483, hey.
Yes, you're rounding off to the nearest thousand.
Okay.
So we don't want to say the number out loud. We want to try to minimize the number, but still keep it significant within its range. So we're rounding it off to the nearest thousand. So this is the part where, sorry?
So, see, I think this is also what I struggle with. So this is what I think it is, but I'm not sure.
Yeah.
Sometimes
So let's start with the rounding off. So we're rounding off to the nearest thousand. What do we do? That was the first step when you round off to the nearest thousand.
Well, don't we have to figure out which is the thousand?
Yes, and which one is the thousand?
It's the 3, isn't it?
So the 3 is the thousand. Then after that, what do we do?
We have to look at the number before that.
And then what do we do after that?
If it's above 5, then the 3 changes to a 4.
And then if it's below?
It stays the same.
Yeah, that's 100% correct. I see you wrote it on the comment section, chat section, which is 100% correct. So it will become 1,484,000.
Okay. So my question then is, say for example, the 7 was a 4. What would the number remain? 1,483,400?
Yes, the number will remain 1,483,000.
Oh, okay.
So
So
even
rounding in a broad broad scheme.
Yeah, so one thing that happens is that if this was a 4, since we're rounding to the nearest 1,000, we don't actually take a look 2 numbers away from the 1,000, only the one number that is before the 1,000, which is the 100. So meaning that this 8 doesn't matter, even though it can change this, it doesn't matter at this stage because we're only looking at the 4.
So it'd be 3,000 and not 4,000 if we were to.
Yes, if this was a 4.
Okay. And I think that's where I get confused because sometimes I'll keep the 4 there, say for example, and then that 400 will be there for no reason.
No, we only take a look in terms of what is the nth digit that we're actually rounding off to. So for example, to say that let's round off this to the nearest 10,000s.
To the nearest 10,000. Okay, so 10,000 is the 8 then.
Yes.
You see it, and then I get.
No, okay, you managed to find the 10,000, which was the 8, right?
Yes.
So then from there, what you actually have to do is just look only at the one number before the 8.
See, my confusion happens then with the 4. Sorry, not the 4, the 3.
No, the 3 now, because it's actually less than 4. Meaning that it does not get to change this amount by increasing it by 1 digit. So this amount will remain as 8. So meaning that when we read out the new amount, we're just gonna say 1,480,000.
And you just ignore all the numbers after that.
You just ignore all the numbers after that. So what we're trying to do is to give an what we call approximation, is to say to someone, okay, I can't read the number, all the full amount digit all out. So like, for example, when we prepare the financial statement, we don't prepare including the cents that you're gonna say, comma 25 cents. No.
Okay.
That means that now the whole preparation, now you'll try to also have to figure out each and every amount to see how much is this amount. Is this in thousand? Is this in millions? So what we actually get to do with the financial statement is that we round everything. If you are making profit and everything in your accounts are within the thousands, so therefore we round everything to the nearest 1,000. And then your financial statement will be presented within what? The thousands. And then on top of your financial statement, before you start writing to say that this is the column of amounts, up there you're gonna say that in thousand, you're gonna indicate that all this amount are rounded to the nearest 1,000, meaning that whoever gets to read that amount, if he's just found an amount something like this, you will know that this is 699,000.
I see.
Yeah, so this is the importance of understanding all this approximation, estimation, and rounding off.
Because I think that's also where I got confused when they give you the budget and it says round off to the nearest thousands and there's no zeros, and then they apply it to an actual statement, and then I don't know how many zeros there are.
Yeah, so
Sometimes you
find a statement up there with an R like this and then say comma and say 3 zeros.
Yeah, and then I don't know.
So what this actually means, it means that all digits that you're gonna be seeing in that column going downwards, they're all rounded to the nearest 1,000.
Oh.
So this is what this R comma with a semicolon 3 zeros, it indicates rounded off to the nearest 1,000.
Okay.
And if they write an R and they actually put a comma and this colon and say million, it means that all the numbers that you are seeing down there, they are actually in million.
Rounded to millions.
Yes, they are rounded off to the nearest million.
So if it's just like a 53 there, it's 53 million.
Yes, it's gonna be 53 million. Nothing of that will be there will be a 1,000. It's only a million.
And if there's just a 1, say for example, it's 1 million.
Yes, but if they want to say, okay, we have rounded all the amount now in millions, but we only have got one line item that is what we call this, that is in thousand. So they will write it as 0.57. So if you find it as 0.57 and it's rounded here as a million, it means that this amount is actually 570,000.
570,000.
Now,
Like half almost.
if this is 0, it means that, okay, this amount is no longer within the million, but it's within the what? Thousands.
The thousands.
Yes. Same applies to the one where you found it written in thousand and then they say comma and they put 0.2. Let's just say they say 0.2. So it means that that 0.2 is actually it's actually how much? 200.
200, yeah.
Yes. So that's the rounding off that we use in finance.
Okay. I think I misunderstood that last time.
Yeah, so I believe with more practice, but if you start not picking up, just send me an email and then let me know if you need a consultation and when do you need it, and then I'll
But yeah,
arrange another
let's move on.
Teams.
Sure.
Yes.
No, I'm agreeing with you. Because
Okay.
I'll definitely send an email.
All right.
Just to
Moving
make sure.
forward.
Yes.
Here's the second practice challenge. It says true or false. So here it says that 4 is greater than 1.
Yes. I mean, true.
And then 10 is less than 40.
Yes. Ugh, true.
Minus 20 is less than minus 74.
False.
And 11 is greater than minus 11.
True.
Okay, the lesser the negative, the bigger the negative amount, it's far away from zero. So that's how we get to identify how much, that much easily to say that, okay, this amount is actually less than the other one. For example,
right.
so if we see them all are being negative and they're being compared, we just then forget to try to ignore the negative. And say it's 20 less than 74.
Yes.
Yes, 20 is less than 74. Then meaning that minus 20 will be less than minus 74.
But isn't negative the opposite?
Yes, negative is the opposite. So we actually get to do the opposite. So minus 74 will actually be what? Lesser than?
Less, I think.
Than minus 20. So we just get to apply it differently.
So with number 4, is 11 more than it's true?
Yeah, it says 11. Yeah, this one is true.
Okay.
So, and then we've got the calculation to say that the total cost for dinner is 20,232 rands. 6 people attended and agreed to divide the cost. How much does each person pay?
I'm just going to turn my calculator on. Each person pays 3,372.
Oh, mine is still off the calculator. Let me see, I can get this one on. I think I have a financial calculator here. Okay, as it is 20,233 divided by 6. You said how much?
3,372.
Yeah, 3,372 rands. Yes, that's correct. And it's number B. It says that a submarine is 40 meters below sea level. If it dives further 259 meters down, how far below the sea level will it be? So this is just a trick question based on how you understand the scenario.
Is it 299 meters?
Yeah, that's 299 meters. So what other people might do, they might go and say 259 minus 40.
Yeah, it's a bit confusing that it almost sounded like it was supposed to be a negative somehow.
Yeah, so that's the trick within scenarios, including finance scenarios. So it's just a matter of making sure that one understand it. So here's another one. It says that 4,604,568 round off to the nearest 100,000.
100,000, okay.
is
What was it? Nearest 100,000. Okay. To the nearest 100,000. Ooh. So
okay.
it's
So find the value that is within the 100,000 first. Look at the number before that, and then you can give me the final answer.
is it 4,600,000?
Yes, that's the correct answer.
Okay.
So did you understand the trick?
I do. And I'm noticing that you have to know your ones, tens, 100,000s, 10,000. It's very important because
Yes, so
otherwise,
that's
I'll
the
get it
importance
wrong.
of knowing the place values.
Yeah, see, that's what I didn't know last time. I thought place
So
values were easy and they're not.
So the last one says that the total cost for a dinner is 20,232. 6 people attended and agreed to divide the cost. How much does each person pay? Okay, this one is just a repeat.
Yeah.
So we're just gonna skip that.
Okay, sure.
Okay, I feel like we've refreshed everything that we covered previously.
Yes.
And so far, I believe your mind is back and everything you're on track. I also hope those others are also in track as well.
I hope so too.
So in terms of the accounting purpose, so the main purpose for accounting is systematic recording, making sure that we comply with the law, which some of the law include SARS as well as accounting standard for reporting, for making sure that companies do not actually, what do you call this? To make sure that companies do not overstate their worth, and so that they also have to make sure that everything is recorded according to standard, and for them not to rob SARS in terms of claiming. So therefore there are standards for that each and every company have to apply, which some of the standards we're not going to cover them because they are for those who are actually dealing with full accounting concept or full accounting activities. And then communication. So accounting paper is also for communicating financial status of the business, assisting with decision making in terms of what to do and not what to do, ensure that assets are being controlled, and then also to be able to plan for future activities. But currently nowadays we've got accounting systems that can be able to generate all of these, and also whatever idea that you actually have or whatever information you want to see based on your financial transaction, you can be able to play around the system and it will give you whatever information that you need, but you need to be able to understand the basic concept behind those calculations. So in terms of what we have covered previously, we did cover what accounting is. That is a system of recording and summarizing business financial transaction, analyzing, verifying, and reporting the result. Do you have any question?
Not so far.
And the important need of accounting is that it is there for us to be able to make sure that we are aware whether we are making a profit or loss, how much is our business worth, and if it's an investor, the investor needs to know how much he or she is worth based on his or her investment on a company. And should I put more money in the business, or actually sell the business, or go into another business and close down the current business, as well as how much money is being owed to me and how much money do I owe to other people. And based on the current operation of the company, is the company actually making profit or losses? So all of these, they are the reason why accounting was developed.
Okay.
So one of the most important concept in accounting is the accounting equation. So with the accounting equation, we get to use the system to actually get to record each and every transaction within the company. So the accounting equation is there to make sure that everything that is, or every activity that is being performed within a company that involves money, we make sure that all the money that is leaving and that is coming in is being recorded and accounted for, and everything have to balance. So meaning that there won't be any what we call this looting or stealing of money, or actually faking company statements to actually get to recruit investors. So,
Is that fraud? Is it not?
yes, that will be fraud.
Okay.
So it says that each and every activity that is performed by the business, in accounting we refer it as a transaction, and each and every transaction will therefore have to be reported within the company, and therefore when it gets to be reported, it will be reported and recorded through the accounting equation concept, which we covered lastly, that assets is equal to owner's equity plus liability.
Yes.
And then these assets, liability, owner's equity, we refer them as element of the accounting equation, which at the end, everything that is recorded under this concept is therefore transferred to one of the statement called statement of financial position, which back then it was used to call the balance sheet statement.
Okay.
So they changed the terminology to statement of financial position from balance sheet statement. So meaning that everything have to actually always balance. So
Wait. I'm writing these down quickly just in case it's not on my other one, the other slides.
No, this slide will also be uploaded. I will send them to Nathan that he'll make sure that they get uploaded.
Oh, okay.
Yes.
I just wanted to write balance sheet and financial position of company. Okay.
Yes, the changes is that the name was changed from balance sheet to statement of financial position, where this whole statement of financial position, it's actually a summary of the accounting equation.
Oh.
Yes, so it's actually showing everything that we have done within the accounting equation, but this time it's fully summarized. But how we summarized, we are still going to cover that in the next coming few slides.
Okay.
So as I've explained last time in terms of the accounting equation, so here it says that the accounting equation offers a simple way to understand how this item relate to each other through the accounting equation, where our assets will be equals to liabilities plus owner's equity, or you can start with owner's equity plus liability. And then the financial position of the company, it's an expanded expression of the accounting equation, which is just gives you everything in summary.
Okay.
So previously we stopped here under the transaction effect of accounting equation, where I did talk that previously that for each and every transaction that will occur in the company, it will have different impact on each and every element depending on what type of a transaction it is. So one transaction might increase both the asset side and the liabilities and owner's equity side. So I'm just gonna try here and write an A for assets. And then I'm just gonna say equals to and write the equity here. And then a plus and write the L for liability here. So this is our accounting equation. So these are the transaction effect that could occur. So I'm just gonna try and explain them here within what I just wrote.
Okay.
So here it says that it may increase one transaction, might increase both the asset side and the liabilities and the owner's equity side. So before we actually start with this, did you manage to take a look in terms of page 26 in terms of classification of accounts?
Yes.
And you understand types of accounts that fall within the assets, the equity, the liability?
Most of them. I still need to just practice and practice and practice just so I remember them, but most of them, yes.
Okay, yes. We did mention that an asset, it's something that is owned by the company and might have future probable economic benefits to the company, meaning that it have to generate either revenue, or when it gets to be sold, the company have to actually get to make profit. That's
Yes.
an asset.
Yes.
And we've got two type current assets, two categories, current and non-current.
Yes.
Where current are those short-term assets that are going to be sold within a year, and then non-current are those that are held by the company for a longer period before they get to be actually sold.
Okay.
And then same applies to liability. We've got current liabilities. Those are your short-term debts, your overdraft, your loan, short-term loans, as well as your wage payables, including your income tax payable for last year. And
Yes.
then for non-current assets, non-current liabilities, those are your long-term loans, which also include your mortgage, where you get to pay it for over 20 years or 15.
Yes.
So basically, in terms of non-current liabilities and non-current assets, they also share the same principle, which is that they all have to be carried for over a year and above.
Sorry, repeat that.
For your non-current assets, non-current liabilities, their principle is that they all have to be carried for over a year and above.
Yes, long term, yes.
Yes, for long term. And then your current assets, we are referring to those
Less than a year.
Less than a year. So normally in the basic concept of accounting, we say that your current assets and current liabilities, they form part of what we call the working capital, which is another chapter that we're going to cover.
Oh, okay.
They are the one that we use for the business operation. Day-to-day activities of the business, they fall within the current assets and current liabilities.
Okay, noted.
And then in terms of the equity, we did mention that equities, this is the contribution by the company owner, where this kind of contribution, it can also be not a contribution. We can also have got interest of the owner within the business, where if the owner goes and borrow money and go and buy assets, and those assets start to generate income, that incomes become of the owner. So that's why we get to say that income and expenses fall within the owner's equity cycle, where the difference between that will become the profit, and that will be of the owner.
Oh, okay.
Yes, so that's what falls within the owner's equity.
Okay, noted.
The capital, which is the amount you contributed, withdrawings that you're going to withdraw, in case if there is more money that is being made by the business and you decide to take a little bit back for himself. And then income and expense, they also fall within.
Okay.
So now with the transaction effect, so what actually happened is that with the transaction effect, let me just quickly check just to make sure that everything is in line. So what actually happened is that with the transaction effect, for each and every transaction, it will affect two accounts.
Okay.
So this account might be, sorry?
I'm just making notes. Each transaction will affect two.
So each transaction will actually affect two accounts, and some of this account might fall within the same element with like assets, or either from assets and liability, or from equity to assets. So it can be within any of those, or within the same range, or within under the same element. But the most important part is that when we get to apply this in practice or record this transaction, at the end, our financial statement we have to make sure that, or our accounting equation, we have to make sure that it's always what? Balanced. So for first transaction effect, it says that it might increase both the asset side and the liabilities or owner's equity side. So I'm going to find one. I'm going to mention one transaction that will affect both, and then we'll be able to show the effects within here. So an example for this one will actually be the owner contributing capital for the business startup. So meaning that there will be an increase in the owner's equity account, which is the capital account. And then again later on, that amount that is invested, we're going to show it under the capital amount that the owner actually invested. That's within the owner's equity. And then that amount will go and sit within the bank account of the business, which is within the asset side. So meaning that our asset is going to go up, our owner's equity is going to go up, our liability will remain the same. So if you check this accounting equation, you will see that there is a positive in terms of the asset and the positive on the other side from the equity and liability, meaning that now it's fully balanced. We have got plus on one side and plus on the other side of the equal sign. Can you see that? Yeah, we're still together.
Sorry, my Wi-Fi cut. My Wi-Fi cut. Sorry.
All right.
I didn't catch that. Sorry. So I was still. You were explaining that each transaction will affect two sides or something.
Yes, I was still saying that each of our transaction will affect two sides, meaning that when we have one transaction, it might either affect this side alone or this side alone or both sides. But at the end, when that transaction gets to be recorded, this accounting equation have to come back to balance.
Okay.
So under this example, I gave an example to say that let's assume that the owner actually contributed capital to start up the business.
Okay.
It means that his capital account will therefore increase to say that he have put money in the business.
Okay.
And that effect or that money will be sitting in our what? Bank account for the business, which that bank account falls within what?
Assets.
Assets. So meaning the assets will also what? Increase. Because that money now sitting there, meaning that now we have got a positive increase. And then the liability side will be zero. Nothing actually happened that side. So you can see that if we put an equal sign, you'll see that from the asset side, we're going to have an increase, the equity side increase, and then the liability side decrease. But at the end, we've got both sides equaling each other.
Oh, I see.
Yes. So that's how the accounting equation works. Another case.
Sorry, the lecturer last year didn't explain that at all. At all. And now this is what it means. Okay.
Yes. So
I understand.
another example is that instead of the owner contributing, he doesn't have money, so meaning that it's zero. So he will go and borrow money from the bank. So our liability is going to go up. And when he borrows money from the bank will deposit money within what? The business account. So our bank account also goes what? Up. So now you can see that we've got an increase on the asset side, and meaning that we also need an increase on the what? Other side. So our liability increased, and then our equity actually what was zero. So therefore we've got a positive on this side and a positive on this side. So meaning that what? We have got an increase on both equity sides. So that's the effect of that transaction.
Okay.
Yes.
I see.
Then now another part is the second transaction effect that might actually occur. It says that it may decrease both the asset side and the liabilities and the owner's equity side. So normally the liabilities and equity side, we might refer them as one side because they're after the equal sign. So an example for this one would be when we have got cash in our bank account.
Okay.
The company is already operating. Now we actually went and took money from the bank account and we pay our what? Our liabilities. The people we actually owe.
Yes.
So what will actually happen is that we are going to take money from our what? Bank account. So it's gonna be what? We're gonna have a decrease in our bank account.
Okay.
And since it comes to the owner's equity, nothing have moved. It doesn't involve the owner money or any account within the owner's equity.
Yes.
We paid the liability, meaning that our liability will actually what? Decrease. So now you can see from the asset side we've got the minus, and from the equity and liability side now we also have got what? A negative. So that's where it gets to balance. So we're also gonna see the effects of this through real transaction that we're gonna do at a later stage.
Okay.
Yeah, and then it continued to say that it may cause both an increase and a decrease on the asset side. So meaning that this can be either on the asset side alone, meaning that I'll just make a quick example to say that assume that you are running a business, you have got money already sitting in your bank account, you went and buy equipment. So what actually happened when you buy equipment?
Sorry, where are we buying equipment from?
No, just an example to say that assume that you have got money in your bank account for your business and you want to
Business
buy
bank.
equipment. So
Okay.
what effect will it have in terms of your accounting equation?
Oh, no. The assets will go down
Okay, we'll go down.
because it's, wait a second.
Okay, the best way to actually learn the accounting equation, you just treat it as if you are actually the business, you yourself as a person.
Oh, I was trying to be the materials.
No, just try to be, okay, in accounting, if you want to understand the accounting concept very well, take the whole business as if this is actually you, this is actually your business, you are the one running every account, it's on your name.
Yes, okay.
So now the activity says that you actually go and took money from your bank account and buy an equipment. So what effects will therefore be there on your accounting equation?
Well, if you're taking money from the business, wouldn't your business account money go down because you have to buy something?
Okay, yes, it's gonna go down. We have got a minus on the asset, and then what else?
But my thing is, wouldn't assets increase also because you're buying materials?
Yes, assets is gonna increase, and then what happens on the other side?
Well, owner's equity as far as going to stay zero, and then
And
liabilities also zero.
so if you take a look into this, is this balancing?
No.
Yes, it is.
How?
The plus and the minus cancel everything, and then the balance remains zero.
Oh, oopsie.
So plus and minus in one side actually tends to become zero.
Oh. Oh,
So,
okay.
so meaning that we have got zeros on both sides and the zeros on the other side. So everything actually gets to balance.
I see. Okay, so let me just make a note of that because that is then zero. But then it's also assets increase. Okay. So I see that. Okay, I see that now.
Yes, and another transaction effect that might occur is that it might cause both the increase and a decrease on the liabilities and owner's equity side. So one transaction can lead to a plus or minus within this side. So the fastest example that I can think of, it's actually selling stock. Ne?
Oh.
So selling stock can affect actually a number of things, but we can actually have cost of sales because now the goods is being sold. So
Okay.
actually this one, it's affecting a number of things. It's also affecting your assets because your inventory is now going to decrease.
Yeah, that's what I was thinking.
Yeah, so I'm just trying to see if there is something that is can only stick within the equity and the liability side.
Sure.
But so far my mind is still actually blank for some moment. So I think
We
we'll
can
just
come
find an
back.
activity while moving forward.
Yeah.
So here it says that regardless of whatever transaction occurs, the accounting equation must be in balance after the transaction is analyzed and recorded.
Ah.
So now for every business transaction, two accounts will be affected, and this is known as what we call the double entry, which is explained on the textbook. I think on, I forgot the page number. Which is explained on page 35 on the textbook.
Page 35.
So if you check page 35,
Rules of double entry.
127.6 double entry. So everything that I was mentioning on the previous slide, it's actually what we call the double entry system. to say that
Oh,
for each and every transaction, 2 items will be affected or more, but the minimum are always 2 accounts.
okay.
And it continues to say that an account can be defined as a separate record to use to summarize changes in the assets, liabilities, or owner's equity. An example of this account might include cash account, which is the bank account, capital account, inventory account. So what actually happened is that with the accounting equation, for each and every, whether it's a new transaction or an old transaction, we are going to open an account for that transaction if it's new.
Okay.
And then when that transaction, when we redo a transaction similar to that within the business, that information gets to be recorded again within that same account to say that this account, we have performed this activity on this date, and then again we perform another activity on this date for this account. For example, I will say a bank account. If money came in from the owner, we're gonna show that okay, the owner contributed this much, is coming from the owner, this is the amount.
Yes.
And then when we spend money, we're gonna go and say again on the bank account, we went and spent this much.
Yes.
And then when we make sales within the business, when that money comes in, we're gonna come in and say, this is how much we made in cash. Only cash. Your bank account only reflect cash item. Non-cash item do not fall within the bank account.
Oh, so no on credit sales, nothing.
Credit sales will be recorded under what we call account receivable. These are people that are still owing you. So we create this
Okay.
account called account receivable. And when you go and buy on credit, we call the people account payable. So they will create an account called account payable. So you're still going to pay this account.
Okay. Okay.
People who fall within this account are people that you're still going to receive money from.
I see.
And then we've got the income and expenses. The income and expenses can be classified under many names. We've got your rent expense, you have got your insurance, you have got your prepaid electricity, water and electricity usage. So those are fall within the expenses. Under income, if you make a sale, it doesn't matter whether it's cash sales or credit sales, it have to be recorded as an income.
Okay.
But then later on, that income we have to classify is just, which means it's going to affect your income account and then also your what? Your credit sales if it's a credit sale, your account receivable. If it's a cash sales, the two things that are affected is your what? Your sales account and your what?
Cash.
Cash account. So
Ah,
both are going to increase.
I see.
So the best way to actually analyze any information or any transaction within the business is to make sure that you ask the following question and make sure that you understand the following question. So for each and every transaction, the following question must be answered when analyzing a transaction and capturing it. What happened? So this is the first question, understanding what type of information or what type of an event happened. Did you actually buy? And when if you are buying, did you actually buy on credit? That's the thing that we actually need to understand. And if we actually bought on credit, what did we buy?
Okay.
So meaning that that's the first thing that we analyze. And then the second thing is which account are going to be affected. So, okay, we understand we bought on credit and we bought this item. Is this item that we bought falling within expense or an assets? Because these are the only two things that we can actually buy. We can actually incur money or spend money on an expense or on an asset.
Okay.
So if it's an asset, you will classify that, okay, in assets, this falls within assets. This is the following account name. So you're going to also identify the account name. And then since we bought on credit, it's going to affect our liability. This is the account that is going to affect. If it's an overdraft, maybe you bought an overdraft. Using an overdraft in your card, you're going to say an overdraft account was affected.
Okay.
And then how is this accounting equation affected? Therefore, on the liability side, you're going to show that it's an increase of account overdraft because we are actually using more credit. And if it's an asset side, you're going to show that this is actually as well as an increase. We bought a new assets. If it's an expense, you're gonna write that to actually spend the money on an expense account. And what account was that? If it's paying employees, you pay them and went overdraft, you're gonna write employees.
Okay.
Yes. So here that it says that if the company keeps accurate record using the double entry system, the accounting equation will always be in balance, meaning that the left side of the accounting equation will be equal to the right side. So where does this come in place when you say the right side will be equals to the left side? So this is that asset side. To say the asset side, we refer it as a what? Left side, equaling the owner's equity, and liability side, which is the right side.
Okay.
The balance is maintained because every business transaction, at least two accounts of the company, it will affect two accounts of the company. For example, when a company borrows money from the bank, the company assets will increase and its liability will increase by the same amount. And when a company purchases inventory for cash, one asset will increase and one asset will actually decrease. And because there are two or more accounts affected by every transaction, the accounting system is therefore referred as a double entry for booking or bookkeeping system.
Okay.
So for each and every account, there will be a left side and a right side.
Okay.
On the textbook, this is explained, but not fully the way I'm going to explain it here.
So, account.
Okay, it says that for each and every account, there is a left side and a right side. And the left side will be referred as a debit side and the right side will be referred as a credit side.
Okay.
So this is an account. If you see this account, we're actually splitting it like this, straightforward like this. And then here there is a line between to say that, okay, we've got a right side called the credit side and the left side called the debit side. So the term debit or credit by itself does not mean that an increase or a decrease. So it all depends on what we call what type of an account is it and where does that account actually falls. And therefore the difference between the debit side and the credit side will form what we call an account balance. So in some instance, you will have this as an account. Here you're going to have an account title to say that this is my bank. And you're gonna record all the money that gets in within the business, and all this side you're gonna, let's say, record all the money that goes out. I'm just making an example.
Sure.
Then at the end you will have to actually get to calculate the balance to say how much money got in, how much money got out. But you actually use one side to say that, okay, I'm calculating based on one side to say that this is the money that comes in, so what is the total of all the money comes in, and you put it this side. And then you add all of this to say this is the money that went outside, and you compare it with the money that came in. And the difference, you're gonna write it on this side because you use this side as a balancing figure. So I'm still going to make use of that and make an example later on. So now I already explained that for each and every transaction, there will be an account that will be affected, and the account will actually have the debit and the credit side. So for each and every type of an assets account, all assets account will increase on the debit side.
All asset accounts.
Yes, all assets account will increase on the debit side and will decrease on the credit side. Here's an example. Let's use the bank account first. Meaning that if we have a bank account, when money comes in, we record it on the what? Debit side. And say we received this money from the owner of the business. If we make sales, we're gonna say we've made cash sales. This is how much we received. When we go and buy assets, so other equipment assets, using the money from the bank, we're gonna go and say from this left side, which is the credit side of the bank account, which is an asset, to say that, okay, we went and spent on, we bought a vehicle. So we're gonna write vehicle and say minus, we're gonna write the amount on the credit side showing that it's a outflow of money within the bank account. And then let's say we then go and buy another land for the company we're expanding. So we're gonna go and write the land that we bought this much land worth. So therefore it's gonna be showing a decrease. So at the end, what we actually do with the asset side, because it normally increases on the debit side, we therefore use the debit side as the balancing side to say that when you want to calculate balance at the end, we're going to calculate all the money we received and we put that amount here, and then also put that amount here. And then later on, we add all our credit side to say that this is all the amount that we spend. And therefore, compared to this, which one is greater? If this one, if we spend, but normally we can never spend more than we have.
Yes.
So we're gonna spend less than we have, meaning that this will be less than what we actually received. So therefore here we're gonna have what we call a balance to make sure that this side, when we add it all, it also add up to the same balance that we use this side.
Okay.
So another example that I can actually get to use will be the inventory.
Okay.
If we are running a company and your company also sells stock, so this will be much easier process to understand, to say that if this was to be inventory account, and inventory is an asset.
Yeah.
So meaning that whenever we buy inventory, we're gonna show on the credit side that we bought inventory of this much.
Yes.
And then when we sell that inventory, we're gonna go on the credit side and say we sold this much, meaning that it's gonna be sub-minusing the one we actually get to had before. So later on, what we actually do is that we go and say that this is the number of inventory we had so far this whole month or this year, and then this is how much we actually sold. So this side, we're gonna take the balance of everything we had this year of inventory that we had and put it here, and then say from all of this that we actually had this year, let's subtract everything we sold so that we can get the balance of what is remaining. So we're gonna put that balance here. And then when we add the balance plus or everything we sold, it should be equal to the total amount of inventory that we actually had the whole year.
I see.
So same applies to our current liabilities. So liabilities increase on the credit side because they refer them as credit as always. So when it comes to liability, just always remember a liability is a credit. So like our credit cards. So just remember this always increase on credit, on the credit side, and then decrease on the debit side.
Okay.
So you go and borrow money, you're gonna reflect it on the credit side. You went and pay back the money from an account that fall within the liability, you're gonna record it within the debit side. Then later on, you're gonna say this is how much I actually went and borrowed so far this year, and also record it on the debit side, and then later on say this is how much I paid compared to how much I borrow, so therefore how much is the balance. So that's within the liability side. So all of this T account that we're actually doing, it's what we call a general ledger account. It's also referred as a general ledger account. So in a company, what actually happens is that we have got what we call a cash receipts journal and a cash disbursement journal, where the cash receipts will actually show us the amount of cash we actually get to receive in terms of our services that we render or the amount that we actually generate from sales.
Okay.
And then cash disbursement will actually reflect all the amount that we actually get to pay out, whether we're buying assets, we're buying stock, we're buying just ordinary expense, telephone bills, water bills, all will be reflected within here the cash disbursement journal. And then if we go and buy on credit, we're going to have a purchase journal. And then if we sell something on credit, we're going to be referring it as a sales journal. And then all of this, when we record them through the double entry, which the double entry is also part of the ledger account, where we get to refer it as the debit side or the credit side. But the most
general.
Sorry?
Is that for general journal?
General journal, it's a normal transaction where you get to record everything within the book.
Okay.
So normally we have got then a general ledger. So normally this one will involve your petty cash, everything.
Oh, okay. I see.
Yes. And then in terms of the accounting elements, as we already mentioned, we've got the assets, the liability, the income, the expenses, the capital, and the drawings. So what the next slide actually tells us is which type of assets increase on which side and which type of accounts increase where. But I've already explained to you that all the assets increase on the what?
On the left side.
On the left side, and then they decrease on the right side, which is the credit. So just remember, the left side it's always referred as a debit, the right side as a credit.
Yes.
And then in terms of all expenses account, let me just make it simple. All expenses, all assets account, they all increase on the debit side and all decrease on the credit side.
Okay.
So that's the fastest way to remember it. All assets and expenses, they increase on the debit side and decrease on the credit side.
Okay.
And all liabilities, income, and owner's equity account increase on the credit side and decrease on the debit side.
Okay, yes.
So one of the most important things, don't forget, a drawings account is actually an expense to the business because the owner is taking money away from the business.
Is the owner's drawings? Oh, I see. Owner's drawings, owner's capital. Oh, I see. Okay, sorry.
Yes, so this is actually just referred as a capital account. You can just call it a capital account. The drawing account is an expense account. You can just classify it as an expense account. You won't be wrong to classify it as an expense account.
Okay.
It is still right within the accounting standard and treatment.
Yes, I see. I see that.
For analyzing and recording a financial transaction. So before we record a financial transaction, the following analysis question must be used. What happened? So I already explained that you need to make certain you understand the event that took place. Try to break down the scenario. The second question that you need to ask is which account are affected. So first thing first, identify the account that are affected. And then this account is to say that is it, for example, I'm just going to make an example. I prefer making examples. The owner actually contributed money within to the business. So identifying the two accounts will actually be the bank's account and the capital account, the owner's capital account. And then therefore we have to classify this account, whether this account are in assets, liabilities, or owner's equity. This comes within that lesson of classification of account to say that, okay, we have got the bank. A bank is an asset, so we're going to classify it within assets. And then capital, owner's capital account, we're going to classify it within what? Owner's equity. So at the end, then the last question that we need to ask is, how is the accounting equation affected? Determine which account is increasing and which one is decreasing. And make certain that the accounting equation balance after recording this transaction. So if you make a decrease and an increase and find that something is off, then you need to actually get to see what's actually happening. So you might find that both accounts are increasing, which is still correct, or both accounts are decreasing, which is still correct, or one account is decreasing, one account is increasing, which is still correct. So let's analyze the transaction of an accounting equation for Lali Media Company. Are you still with me?
Yes.
Okay, now we are trying to do a real accounting equation and apply it. So I'm going to be asking you questions. The first example says that Lali, the owner, invested 125,000 in the business. So what happened?
Okay, she invested 125. So she put in 125 into the business bank account.
Okay.
So assets.
So it's from a personal account to the business account.
Yes, so it's from equity.
So now the second question for us to be able to understand is identify
Right.
affected account.
Identify the accounts that were affected. So equity and assets.
Okay. Maybe equity and assets are elements.
Oh, okay.
And account, it's there within the transaction itself.
So accounts itself, bank account.
Okay, that's correct.
And which is the second one? Assets? No, it would be a little bit more.
Let's go to page 26 on your textbook.
Yeah, I'm going to page 26.
Or instead of page 26, I think you can also use page 32.
32.
Yes.
32. Ah, I see. If she's just putting money into the business, but for nothing specific, isn't it just capital?
Yes, that's correct. That's capital.
Okay.
So cash, which is the bank, and the capital will be affected. And since she's the only owner, we're gonna just write, okay, this is Lali's capital account. But if there are two investors, you are starting a business with a co-founder. You founded the business with someone, meaning that the all capital contribution will have to be splitted to be able to identify who actually contributed how much. So each and every time you record the capital account, it have to start with the owner's name or the person contributing the capital.
Okay.
So the bank one here, please, you can just write bank instead of cash. You can just write that this is bank. So we have identified the two accounts that will be affected. Now let's classify the two accounts. Under which element do they fall within? Under the accounting equation.
Oh, okay. So cash is an asset.
Okay.
And capital is owner's equity.
So that's 100% correct. So that's how you classify. Once you get this one, so the main part is
Identify accounts.
identifying the account. Once you identify the accounts, classify the accounts. Is this an asset, equity, or liability?
So identify, then classify.
Yes. And then now the last question. What effects does this have on the accounting equation? On the asset side, what effect will be there? On the equity side, what effects will be there?
Okay. So
The effects refers to the increase, decrease,
yes,
plus or minus. Yes.
So as I look at the equation in front of me,
Yes.
I know that owner's equity will decrease, will it not? Because she's putting money into the business.
Okay,
Is it the
you
wrong
are
way?
the business. Remember, you are the business.
Oh.
That's the most important part in accounting. You are the business. Do not think of the business as in something else outside. Take yourself that I am the business.
Okay, so if that's the case, then asset increases.
Okay, let's restart from scratch and then move by step. Then you'll be able to catch it up, because I feel like the small gap that we took might have took you off. Okay.
Okay.
We're just gonna move forward nicely. What happened? She took 125 from a personal bank account and deposited it into a new account in the business name. That's the business. That's the new business that is already formed. So you said the account that are affected is what?
The accounts that were affected was cash and capital.
And what is cash classified as?
It's the bank account, the business,
And it's yet to be classified as in which type of assets?
Yes. And then
And
capital is her own bank account as owner's equity.
and therefore the cash account, since she's putting money in the business account, what will be the effects within the accounting equation?
Cash goes up, capital goes down.
How does capital goes down when she's bringing money in the business?
But isn't it she taking it from her personal account?
So this is where the tricks comes in within the owner's equity, understanding the event.
Oh.
So what actually happened outside the business on a personal life does not get to be within the business.
Okay, so I think, so when it says identifying the accounts, when
Yes.
I say cash,
Yes.
it's going from one account into that business one.
No, but what's happening outside, any transaction that happened on a different bank account that is not of the business, we don't actually get to entertain anything.
Oh.
Only when the money is flowing within the business and out of the business, that's when we record.
Okay.
So in this incident, this is what's gonna happen. Your bank account will be affected, like you said.
Yes.
The capital account will be affected, and when we classify this, the bank account will be on our asset side, and then capital is gonna be on the owner's equity side. So now in terms of the increase, so here, which means that is gonna be our asset side, which is equals to this side is gonna be equity, and we don't have anything on the liability side.
Yeah, there's nothing on the liabilities.
So when the owner contributed money, the account is gonna be looking like this. It's a T account.
Yes.
So this is Lali's T account. So now the question is, which side does the equity side increase?
It increases on the credit side.
So
on the
credit
right side.
So we're gonna go and do what? Is she taking money out or putting money in the business?
Putting money in.
So meaning that it's gonna be a plus.
Okay.
But when she takes money, what happens?
It decreases.
It decreases. So you get to see where the accounting equation comes in, the effects. So when we apply it on a T account, it's much easier for us to see whether it's supposed to be a plus or a minus. And then on the asset side, it's a bank account. So money is coming in the business bank account. Which side?
On the left side.
So it's gonna be an increase on the left side.
Yes.
So based on this accounting equation, now can you try to let me know what will be the effects?
Wouldn't it balance?
So when it balance, what is actually happening?
It means
It's increasing, which is our bank account.
so it's increasing bank account and increasing capital.
Yes. Remember the amount that, okay, let me put this way, so because I believe this you understand. When we say someone is,
I have to remember the debit and credit side of each account and why it's that way, because I didn't take that into consideration.
now it's fine for now. We're not gonna work much on that, but we're just gonna explain them at a later stage. So what actually happened is that when we say this person is worth this much, we are referring firstly, when the business just started, we are referring to the amount that he invested in the business, which is the capital.
Yes.
Yes. So meaning that the more money he put, the more his capital account goes up.
Oh, so I mustn't look at it like cash is an account that's going out of. It's just a large amount, and
It's
then it
just,
reflects in another account as it's increasing.
yes.
Oh, okay. It's not, I mustn't maths. I mustn't be subtracting in, okay, I see.
Yes. So that's why I said, even if you are the owner, if you are, that's why I said in accounting equation, treat yourself as the business.
Oh, that's why you said that. Okay, because I don't
Yes.
do anything. I just go up, down.
So if you are the business, you
Right.
don't know where the money is coming from. All you know is just
Yeah.
that money just came in.
Okay.
So
Okay.
you get to see, but actually you get to know, okay, who actually gave you the money.
Oh, okay.
You don't know whether that person withdraw money from a personal account or what, as long as that's okay. Ruby actually deposited money into the bank account, or Ruby transferred money into the bank, into the company's bank account. So
Yeah.
her capital is going up.
Yeah.
So
Okay.
meaning that if we were to say that you contributed 50,000, I contributed 20,000, when it comes to the share of profit, you're gonna get more because you contributed what? More.
More. Got it.
Yes.
Okay. I think I'm understanding more now. In my
Yes.
lecture
So
last year, I did not understand this.
the last question was, does the accounting equation balance? Now we put the figures down.
Yes. Nothing in liabilities, but there was in the credit side of equity.
Yes. So we're gonna say on our accounting equation, which is assets equals to owner's equity, the following account was affected: cash,
Yes.
owner's equity, capital. So on the cash, we say it goes up by 125. And
125,000.
also on
The
the
capital
capital,
side.
125. And
Great.
therefore, it
It
balanced.
balances.
So here I forgot to also change to 125.
That's fine.
Yeah, so it's supposed to be 125. So it balance assets, it's 125,000. Liability of 0 plus the owner's equity of 125, meaning that this side will be equal to 125.
Okay. So when those three questions of
No, those three questions are there to assist you understand.
and this is specifically to do with the accounting equation and double entries.
Entry. Yes. Yeah.
Got it. Got it. Got it.
Yes. So while you understand this, it will also be easier for you to be able to understand the general ledger, because the general ledger is just a T account for the accounting equations, or
Oh,
the accounts within accounting equation to show, okay, we've got the capital side, how many transactions occur within the capital account.
I see.
Yes. Oh, here are some activities. We do this one. I feel like due to time, because this was supposed to have been covered during the first lesson.
Yeah, I see.
And
I
half
might
of
have
this.
to schedule a catch-up lesson with you.
Yes. So, and then, so what we're gonna do is that now it says indicate the account that will be influenced following by the following transaction. So I also edited this. Other campus do not have this. So it says also indicate whether the account will increase or decrease.
Decrease.
Okay, so the first one is to say that, let me just do this. I'm noticing something here. Where are we? I just noticed something. Okay, I feel like it's fine now. So we've got the account debited and account credited. Without actually going to the accounting equation, you just have to apply this here. The owner deposited capital, which account will be debited, which account will be credited. Identify the two accounts. Hello? Are we still together? Hello? Ruby, are you still with me? Hello? Hello, are you back? Are you back? Okay, no problem at all. Apologies accepted. Just to check if you still have got your mic, because we're about to do an activity. So under this activity, we are supposed to actually identify which account will be debited, which account will be credited. As you all remember, under each and every account that we have, it have got a debit side and a credit side. So whichever account gets to be affected, and it actually have, when it gets to be affected, that account, if it's being affected and it's actually increasing and it increases on the debit side and you're debiting that account. So you're going to show that effect that, okay, this is the account that is being debited. So it's a positive if that accounts fall within the assets. If it's fall within the credit side, therefore you're going to show that this actually account when it debited, it's actually minusing. So it's reducing the balance. So let's do this account, this transaction, this activity, and then we'll actually do a catch-up recording at a later stage. So let's start with the account where the owner deposited capital. So which two accounts will be affected and which one will be debited and which one will be credited? Is your mic?
Oh, there we go. I'm back.
All right,
Okay.
yeah. So let's attempt this this practice question so that I can get to see your understanding.
Sure. Okay, so the owner's deposits capital. Sorry, let me just make my.
So this is the first one. It's similar to what we just did now, not so long ago, the first example.
So the account will be credited on the right side, positive side.
Okay. Okay, this is what actually happened. Remember the transaction effect, the question that you have to ask yourself.
Oh.
Yeah, so we're still applying that, but this time we're saying which two accounts will be affected. We already understand. So you analyze the transaction, what event took place. That's understanding the transaction.
Okay.
And then after that, identify which two accounts are affected and which one is increasing or decreasing. So that will depend on which side it increases. Whether it increases on the debit side or credit side, then you can identify that, okay, this is the one that we are debiting and this one we are crediting. And therefore, when we credit this one, it's actually increasing or decreasing.
Yes.
So this is what we have to do for the first one. So I'm just going to do the first one with you so that I give you a clue of what is actually happening.
Okay.
The owner deposited capital. So what are the two accounts that are affected? We have got the bank.
Yes.
And we've got the capital account.
Yes.
So which account are we actually debiting? So, and which one are we crediting? So when it affects the bank account will actually do what? Increase. And the capital account will also what? Increase. Then now the question is, okay, this is an asset, the bank is an asset, so the assets increase on which side?
Debit side.
So meaning that we're going to debit what? The bank account, and it's gonna be a...
Oh, I see, a specific account debited. Oh, okay.
Yes. And then therefore on the account that will be credited will be the what?
The capital
because it increased on the what?
Credit side.
Yes. So this is the trick behind this. We're actually performing an accounting equation through a T account as well within the same time.
Okay, so for
number two.
So for number two, sell goods for cash to customer. So it's inventory.
Okay, we've got inventory
for cash to customer and income.
Okay, it is income.
Or do we have to get more specific than that? Because then I can just say sales.
Okay, let's say sales. Yeah, we're actually looking for accounts.
Oh, then specifically.
Okay, for this transaction, let's ignore the inventory account. Let's focus on the income.
Oh, okay.
So that it becomes easier. So which two accounts are affected based on the income? You were right by the sales. So sales will be affected, it will go up. And which other account?
asset. Okay, well, more specifically,
if this was your business, you sold me something and I paid you in cash, what will happen in your business?
something will go down.
Now, I know that inventory will go down, but I'm saying let's crash inventory out. Let's focus on the sales. What will actually happen in your account beside the inventory?
Oh, the cash will go up.
So the cash will go up. What is cash?
Capital.
Cash falls within which account? What is the account?
Capital.
No, what is the account?
The bank account.
So the bank account will go up, right?
Oh,
And
I'm
then
the business, of course, of course. Income goes into the bank, so I'm the business account.
yes.
Okay.
And sales goes up, banks goes up.
Sales goes up, bank goes up. So it's assets increase on the debit side. So the sales. No, wait, I'm not. No.
Let's start with the bank account. Okay, the two affected
Yes.
account is the bank and the sales.
Okay, so bank account increases, and because bank is on assets, it'll increase on the debit side.
So account debited will be the bank.
Yes.
And then what will be account credited?
So if it's sales,
Sales, it's within, okay, like I remember I said equity, liabilities, income, they all have the same effects.
yes.
Yes.
So it will. Okay, so if sales is the income, then it will be, the account will be credited on the right side.
So it's gonna increase, the sales will increase, which is on the credit side.
Yes.
The right side. So meaning that we're going to credit what? Sales.
Sales, yeah.
So it's gonna be a plus.
Yes.
So what happened actually when we sell on credit?
It's gonna be a minus, wouldn't it? Because the money's hasn't come in yet.
I said which account do we call it when you sell something to a customer on credit?
Oh, on credit.
When you sell an account, when you sell something to a customer on credit, what account do you create? I did mention it earlier.
I wrote it down. Where is this?
Okay, it's account receivable.
Oh yeah. Oh yeah.
So it becomes your account receivable. So two things that will be affected this time. We are not receiving money in the bank. We are still being owed.
Oh,
So
okay.
what we're gonna do, we're gonna create an account what?
Receivable.
Instead of what? The bank.
Yeah.
And then also another thing is that our sales will still be going.
As income.
No, ours is our as income, but our sales will
Still be
still
credited.
yeah, so it's still gonna be credited. So meaning that we're still gonna be having sales, which is gonna be going up. But this time on our asset side, we don't have our bank going up, but our account receivable going what? Up. Because now we've got a new person who's going to owe us.
I see.
Then we've got now, it says the same person, which is now the account receivable, we also refer them as debtors.
Oh, okay.
So, okay, the terminology used, we have got account receivable or debtors receivable.
Debtors receivable.
Yes, or debtors account. You can just call it debtors account or account receivable.
Okay.
And then short-term credit, we also call them creditors account or trade payable.
Trade payable is a short term?
Yeah, those are short-term like loans or when you buy on credit.
Or buying on credit.
Yeah, or we call them creditors account.
Creditors account.
So now on this one, I noticed that our time is up. So let's just finish this one and then we're done.
Sure.
So it says debtors make a payment of the account. So he actually bought on us on credit, which was this transaction. But this time, that person is now paying us. So what will actually happen?
Okay, so if the debtor is paying us off,
Yes.
the accounts that will be affected are accounts payable.
Okay, accounts payable will be affected.
And sales.
How is it sales affected?
I mean, not capital, cash. I mean, income, sorry, income. Let me say income.
No, okay, let's go back to the first one.
Okay.
We sold something to the customer. He bought it on credit, so our account receivable increased because we have got someone who's owing us now with a debtor.
Yes.
The sales went up because we actually sold something.
Yes.
Now that customer is actually paying us now back with cash. It says debtors make a payment to pay off the account which he actually owes us. So you are
We
the
had an
business.
outstanding fee before this.
Yes, you are the business. So I am your debtor. I'm coming to you to pay off my debt. What will happen to you as a business?
As the business, I will get money in because
And
I've already sold the inventory. That's
so,
gone.
so if the money is coming in, what account is affected?
Income.
No, the income is already there. You already made income to show that you've already made the sales. Sales is your income.
Oh, so we already did the sale. He's coming back now with the money. Cash.
Yes.
Bank.
So that will be the bank.
Yes.
So that's the trick within the accounting concept. So people get to mix these two and say, are we making sales? Whereas we are not making sales. Sales was already made.
Yes.
So our income already went up here when we recorded that sales went up.
Yeah.
And then we also showed on our asset side that we didn't receive cash, we had an account receivable, meaning that someone actually bought on credit.
Yes, I see
The
that.
person owes us. So when the person comes in, the bank
They
account.
pay that. Oh, it must show this.
Yeah, so now when the person comes in is bringing money to pay off the account, the bank account will be affected. Bank will be doing what?
Increasing.
Increasing. And when the bank increases, increasing on which side?
It's increasing on the debit side.
So meaning that we're going to debit what?
The bank account.
Because it's increasing on the debit side.
Yes.
Then now, again, which account did you say it's affected again?
Accounts payable, which means
Accounts
they
payable.
must pay
No,
us.
it's receivable, sorry, not payable.
Oh, is it not?
No, receivable. Payable, it's when you owing someone.
Oh.
Receivable, someone owes you.
Okay.
So this person is actually paying you back. So what is
Okay, so
actually?
if the accounts receivable, then it'll be credited on the, I mean, it'll be
Is your T account receivable?
It'll be
So
debited.
it's an asset. So what actually happening?
It'll
If I
plus
come,
on the left side, won't it? Because it'll debit.
if I'm coming to pay off my debt from you, what will you actually do?
As the business, you're paying the debt off.
Yes, what are you going to do on my account?
On your, oh, I clear it. I clear the debt.
So when you clear it, what effect does that have? Is it a
Oh, like
positive
a
effect or a
minus.
negative?
It's a negative.
So which means it's gonna be account receivable, which is credited because it's an asset, it's gonna be showing what? A minus.
Yes.
So since all of these fall within the assets, so it's gonna be plus and minus, leaving a balance of what?
A negative?
Nope, zero.
Oh, a plus and minus. Oh yeah, of course. It cancels. It cancels, and then
They're
it's
all within the assets.
Okay. I forgot
So
that I
means
wrote
that
that
it
one
have to
down.
be exactly the same as what is on the equity and liability side.
Oh yeah.
So everything have to always be in mind. So on the accounting concept, everything that you know, your knowledge, all have to exist on every transaction.
I see.
So in terms of buying stock for cash, so which two accounts are affected?
Okay, so stock is inventory.
Okay, we've got inventory. Which other account?
And then cash, which is bank.
Cash, which is bank. So now you're getting it.
Yes.
And then what will be the effects on these two accounts?
Okay, so we buy stock, so the inventory increases, which means
And
inventory is an
let's
asset.
classify the inventory. Which element does inventory fall within? Assets, equity, or owner's liability?
Assets.
Assets. So it's increasing.
Yes.
So when it increases, which side does the assets increase?
The debit side.
So meaning that we are going to debit
The inventory accounts.
inventory account and show that it's a plus. It's actually increasing because of the debit on the debit side.
Yes.
And then which other account is affected?
Bank.
The bank. And what's happening on the bank?
The bank is buying stock for cash. The bank is having money taken out.
So what effect will be there?
It will decrease.
Sorry?
But the bank has money taken out.
So what effect will be that?
It will
Decrease or increase?
decrease.
So which side does the bank account decrease?
It decreases on the right side.
On which side? The right side, right?
The right side. So a bank will be credited.
So bank will be credited. That's 100% right. And these two accounts, we classify them as assets, right?
Yes.
So what effect will therefore be on the whole total accounting equation?
If they're both assets, it will be zero.
That's 100% right. Just attempt for me the second last, purchase stock on inventory, and we'll call it a day.
Sure. Okay, so purchase stock, inventory on credit. Okay, so inventory is affected. And accounts payable.
Okay, accounts payable.
Okay, and then what will happen on these accounts is that inventory as an asset will increase, which means that it will be inventory would be debited.
And then
Accounts payable, because it's something we owe, it will be an increase on the credit side.
so it will be credited.
Yes. So it'll be accounts payable credited.
So is this a plus or a minus?
It's a plus.
So what effect is there on the accounting equation?
There is a Balance?
How does it balance? I know it balance, but explain the balancing, how it balance.
Okay, so it balances because accounts payable falls under liabilities because it's something we have to pay.
Okay.
And then the inventory is something we already, well, inventory is an asset because it's something the business can make a profit of. So
Okay.
that's A, and it's on either side of the equation, so it'll equal out because
Oh,
there's no liability.
That's 100%.
No equity.
No, just that's 100% well done, and I'm very excited that you actually learned a lot, and
Me too.
you are picking it up very fast.
Okay, I'll email you so I can schedule that 1 hour catch up with you, but I'll email you so we can organize with our schedules.
No, not a problem. I'll also make a recording of it by tomorrow and upload it so you can also check out the recordings. And then
Oh,
when
are you sure?
Sorry?
Oh, okay, do that, and then if I have questions with the recording, then I can always talk to you.
Yes, and you can schedule what we call an appointment, then we can just have a chat about it.
Okay, I'll do that.
Yes, okay. You have a lovely evening and a blessed week ahead.
You too.
And that's all from my side. Thank you for joining.
Thank you very much.